we had no interest rate cut from the Bank of Canada today, and I'm here on the TD Securities Exchange trading floor with David Tulk, Chief Macro Strategist, TD Securities, and we're looking at nothing happened today, but what could happen ahead. So David, why the snoozer a bit today?
Well, I think it was really a case where the Canadian economy, at least, was unfolding largely as the Bank of Canada had forecast back in July. So they got it right this time. Q2 growth came out exactly as they anticipated. So there wasn't very much of a shock to respond to. And this is in stark contrast to the cut that we saw in July, where things were much weaker than they had anticipated. So with things unfolding as they had hoped, there is really little cause to catch up to where monetary policy needs to be.
So what happens next then?
Yeah, I think the focus will shift a little bit outside of Canada's borders. Next week, the Federal Reserve will meet, and that's a key meeting. This could potentially be the first rate hike we've seen in almost a decade from the Fed, and it will be, I think, a very close call. So the Fed is trying to balance some domestic momentum that's holding up reasonably well with an external backdrop that still looks pretty precarious. So our feeling is that market volatility and what it implies for the outlook for the U.S. economy might cause the Fed to think a little bit twice about hiking, so we see them instead taking that meeting off and then reevaluating things early next year.
So does that leave us with any more optimism from the Bank of Canada?
Well, it seems if you look at their statement in isolation, it feels as if they are a little bit more optimistic on a couple of key aspects of the Canadian economy. The first is that strength in the U.S., which is helping to spur some export demand, particularly in the non-energy export sector, which was really the crux of what the Bank of Canada was hoping to see. So taking that at face value, there is a little bit of optimism there, but I think the bank is also quite aware of some of these external factors. So they're watching China just like the rest of us, trying to gauge what the fallout from that market is and what it will mean for the global economy.
So what are you expecting for October meeting?
Well, I think it might again be a little bit of a snoozer. So I think the Bank of Canada was certainly one of the more interesting central banks to follow since the start of the year after the surprise rate cut in January. But I think it might go back to being a little bit more of a backwater story where I think if things continue to unfold generally as the bank expects, they won't need to do very much.
All right, thank you very much, David. I've been joined by David Tulk, Chief Macro Strategist, TD Securities. I'm MaryAnn. Thanks for watching.